Hey gang, thanks for joining me for another Weekend Trading Edge video. Let's get started on our look around the markets. We're going to start this week with the pound dollar. This was a pair that we were watching pretty closely for the past week and a half in the live trading room, being patient and not jumping the gun, and we finally got to the level that we were looking at. What we were looking for was a complex pullback here and a potential bullish trading opportunity. Now, the sneaky part was deciding whether this level of structure was going to be important or this level of structure was going to be important. And we had some really good conversations on how not to get baited into a premature trade. And you can see if you did up at this level, you probably would have been hit with a loss. So glad we were patient, glad we stuck to our guns, and we have now entered the level that we were looking for, which is this consolidation level right here before the big elephant candle. Now we have some more confirmation at that level as well. We have thrown in volume during the week. Put that back on your chart. You can see the volume spiking up during this level. We can also bring in Fibonacci retracements, swing low to swing high. You can see, boom, we have a 618 Fibonacci retracement, one of the golden means, right down at that level as well. And now, since we have that complex pullback, we can bring in some more Fibonacci influence. I'm going to take my Fibonacci extension tool from the swing high to the swing low, this first move down before the retracement, and back up. You're going to see that's giving me a 127 extension right down here. And I'm going to do what's called a Fibonacci inversion. So typically with our Fibonacci tools, we're measuring from left to right, up to down, or down to up. This time I'm going to reverse it, right? I'm going to go from right to left and invert the Fibonacci of this pullback. So take the high of this pullback, drag it backwards to the low of this pullback, and back up. And I know it's getting a little bit crowded right there, but if we zoom in, you can see another 1618 Fibonacci retracement in that level. So what we had here was a few things, right? We had a little bit of volume for confirmation, not a great amount, but it does spike up and get past the void. But more importantly, we had our 127 down here. We have our 618 and our 1618 kind of golden mean crossover right there as well. And then to cap things off, right, put a little cherry on top, we have our $1.22 even handle psychological number. So you can see price action came right down to that zone we were looking for, had a nice little rejection candle to end the week. Would have been awesome if we ended with a higher high, higher close. That would have been an at-market signal to buy, but still a nice signal, a nice sign of a hold at this level. It's going to be ready for buys as we start our next trading week. Now, speaking of trades, been watching for a while the euro yen. If you guys have been following me all year, the euro yen has been my favorite pair of the year. I often get asked the question, Akil, what is your favorite pair? And selfishly, it's whatever pair is making me the most money at the time. And that goes for the most hated pair as well, the one that I'm losing most money. This year, it would be the euro yen. We've had some very big directional movements. It's been made a little bit easier with the fundamental state of the yen as well. And we're getting to the point where we're almost at the end of the potential move, right? If we go back, and again, if you've been a frequent viewer of this video, you've seen this for a long time, right? But if we go back on the weekly and zoom all the way back, we're getting towards the top of this consolidation. You know, obviously after we get to that point, I'm no longer interested in buys, but we are interested up to the 160.60 level next, or 162.60 level next. So what we were waiting for the past couple of weeks were opportunities to get involved. And we had a big consolidation level here, wasn't able to get involved. We had a higher high, higher close and a pullback here. This was another one, wasn't able to get involved. We had a, not a high and tight flag because of that spike to the low, but a nice consolidation breakout that we called this week in the room. Wasn't able to get involved, right? And when I say wasn't able to get involved, what I mean was I didn't get my entry signals. I know some of you guys are asking, well, Akil, if you're making these predictions and you can see prices moving forward with your predictions, right, why not just take the trade? Well, the thing is, we can't just act off of our gut, off of our emotions. Even if we think something is going to happen, we just can't act off of it. That's not a very consistent way to trade. You're going to end up getting yourself in a lot of trouble. So we have to go through this process, IPDE, where we identify, we predict, we decide what we need to enter, and then we need to wait for the market to give us our reason for entry. If it doesn't give us our reason for entry, we have to stay out. So it's just being a disciplined trader. Fortunately, on the last move here, we did get that reason for entry. We had a nice bull flag pattern here on euro yen. You can see that we broke out, then we retraced back, put in a nice double bottom in this area, higher high, higher closes too, and we're able to ride this up. So finally got the fourth entry I've had on euro yen this year, but first one in in months. Now, with that being said, right, the move still isn't done. Again, 162.60s is that upper level that I'm predicting we're going to go to. So we still have room higher. So what do? Well, we don't do anything fancy. We honestly don't do anything different. We stick to the exact same method that we've been tracking forever, right? We wait for a fresh break and then a retracement. We wait for a fresh break and then a retracement. We wait for a fresh break and then a retracement. And we keep waiting for that until the market has gotten to our kind of upper level. Once we get there, then we reevaluate the entire situation as there's major structure at that level. But even there, we would still look for a fresh break and a continuation up. So nice trade. Congrats to all you guys that took this. I know a lot of you guys were watching this week. Hats off. Really great to see some new traders get some positive moves early on. But don't fall asleep on it. Don't do anything dumb if you missed out. There are still more opportunities to get bullish here on Euro Yen. Next up is Aussie dollar. This was another one we were tracking during the week. We're looking at a head and shoulders pattern. I erased some of it to kind of keep my charts looking nice, but I'll draw it back on for you guys so you can see it if I can find the tool. We're looking at a head and shoulders, top left shoulder right here, first retracement, head right there, second retracement with the slanted neckline, that red dotted line. If you're a slanted neckline trader, if you're a horizontal support and resistance trader, that yellow line is gonna be your neckline, right? And boom, our right shoulder right there. And it wasn't a head and shoulders I was too interested in, mainly because there wasn't a lot of profit potential to the downside. The first level I thought we'd go to was this first white box, which we completely blew right through. The second level, so my secondary targets would have been right here at this 886. Now, the cool thing about this 886 was this was also the completion of a bat pattern. You can see price action to end the week came right down to that level and filled the bat pattern. Now, this brings up a good point. We talk about something called front running a lot on the site in our training, and it's not front running like the illegal way of doing orders and stuff like that. What we mean by front running is that when we look for orders, limit orders specifically, right? Because those are the ones that we have, or limiter stops, we have those on the chart prior to price getting there. We want to take the spread into account. So this is a perfect example of this and why it could be helpful when you're trading. And I learned this lesson the hard way by missing out on a lot of trades. So our bullish bat pattern completion, and I'll kind of, let me erase the head and shoulders for you so you guys that are new can kind of see this thing. Here we go. It's the orange little triangles there. Just move from swing low to swing high, X to A, or yellow. A to B is that first retracement, B to C is that failed extension up, and then a CD completion is a move down here to our 886 Fibonacci retracement. We're gonna talk a lot about advanced patterns in Monday's Q&A. So if you're someone that's interested in that, make sure you attend. So you can see that our 886 is right here at about 06384. 06338, early Saturday morning, right? And price action nipped it. So here's the thing. If you have your order right here, because the spread needs to be taken into account for you to get involved in your trade, you wouldn't actually be filled this trade until price pushes past that level by your spread, whether it's 2 pips, 5 pips, whatever you have on the Aussie dollar. And that used to suck for me because I used to put orders right on there and I used to look at my chart and be like, oh yeah, I'm filled, I'm getting involved in this trade, market's rallying up. And then I'd open up my platform only to see that I was never actually filled because price hit the level, but it didn't go past by the spread. So I technically didn't get filled because the broker's got to get paid first. So by front running, what we're doing is this. If I want to get filled at 63.38, what I do is I put my orders above that. I put my orders at, say, 63.41. That way, if price action actually hits 63.38, I get my fill. Now, I get my fill at a little bit of a higher level, which is okay, but that's how it always is, right? You got to take that spread into account. But that's what we mean by front running. And you got to ask yourself, is it worth the few extra pips? For me, it is. It's definitely worth being in an opportunity and not missing what I consider to be a high probability trading opportunity because I'm stubborn over a few pips, but that's something you want to think about in your trading. So Regardless, bullish bat pattern here. Technically, it's completed and pushed a little bit up, but you know how the markets are. This thing could easily come back down and give you a secondary opportunity to get involved. So if you're an advanced pattern trader, say that 6 times fast, keep an eye on the Aussie dollar for the week ahead. Next up is the Euro Aussie. This is going to be a straight counter trend move. Price action has rallied up into a previous level of structure. Look left, structure leaves clues. We have this level right here. You do want to be aware and be careful about this level looking even lefter, this overlapping level of structure. Typically when we have overlapping levels of structure, the one that is further away is the more powerful one, and sometimes the market likes to be sneaky and kind of touch it, knowing that rookie traders have their stops right above the highs, right? It stops them out and runs without them. That's one of the things you'll learn in your trading journey, is not to be acute with your stop loss. But we have a nice move up here. You can see some more analysis we did as well. We have our volume on the right-hand side, the 168 even handle, so another psychological number, an AB equals CD pattern. That's badly drawn in, but we would redraw it. Trust me, there would be one up there. This is a nice counter trend structure based trade. We're also getting a lot of clues from the market. We have price action pushing up, high momentum. We can see the slope of our move decrease, which means a loss of momentum. We can see the individual clues from our candlesticks here, right? Tails, wicks, legs, whatever you want to call them, to the upside. Those are signs of bearish rejection. Bulls are pushing up, they're getting beat down, and then we ended the week with a beautiful combination. Again, this long wick test candle, and then a lower low, lower close. RSI over bought as well. It'd be lovely if we had some RSI diversions. That would be great. We can't get it all the time, but this is opening up for a nice bearish structure trade here on the Euro Aussie, excuse me. Dollar Swiss, rarely do you ever see me look at the dollar Swiss, right? Typically the euro dollar is doing the exact same thing, just kind of flipped upside down. But I want to bring this up. We do have an advanced pattern formation here. We have a swing high to swing low impulse leg. This is going to be our X2A. Grab my little pattern tool here. X to A, swing high to swing low. This first move up is going to be our A to B. You can see it crosses the 50%, doesn't come to the 618, putting us on alert for a bat pattern. Our retracement right here, our failed extension, I should say, is going to be our B to C. And then if we come up, just like Aussie dollar, to our 886, that is going to be the completion point for a bearish bat pattern. So looking for potential sells in this zone. Now, again, mentioned this earlier in Monday's Q&A. I got a great question about a trader who was in the live room and identified a potential advanced pattern formation, and we said, and politely, of course, no, that wouldn't be one for me. It does not meet the rules. And he had some questions on rules because he's gone to a few places, and if you know anything about trading, you go to different places, you're going to get different rules, right? It could be for advanced pattern formations. It could be for double top, double bottoms. It could be for pennants and flags, right? Depending where you go, everyone has a different interpretation of whatever the technical thing is. And that's the gift and the curse of trading. The gift is that there's all types of freedom in trading to kind of do things and do it towards your liking and create your own system and style that fits your personality and philosophy. And that's what we encourage. The bad thing is, as a newer trader, it's very hard to understand what is right, what is wrong when you go to 3 different places and you get 3 different rules. So we're going to talk a little bit about the history of advanced pattern formations, why the rules are different in different places, and ultimately which ones you should follow. So again, I'm obviously speaking to the members here. Make sure you show up to that Monday Q&A. It's going to be awesome. But advanced pattern formation, bearish bat, looking for sells here up at the 886 on dollar Swiss 4 hour. We're going to follow up a little bit on advanced pattern formations here on the Nikkei, but also kind of add a structure-based trade as well, because both are present. Probably a little bit clearer if you go out to the daily chart, but we can see it pretty clear on the 4 hour, so we'll stay here. We have a potential advanced pattern formation here on the Nikkei, right? Swing high to swing low. This big move is going to be our X to A. That's going to be our starting point for our pattern, right? Every advanced pattern starts with an impulse or an anchor leg. You don't worry about anything else until you got those. This time you can see that we retrace to the 618. Remember, the last one did not hit the 618. That's why it was a bat pattern. This one touches and passes the 618, which puts us on Gartley pattern alert, eliminates it from being a bat pattern or a cipher. We then have our failed extension, which comes down here. And then what we're looking for is and again, this is where the rules get different depending on who you're learning from and kind of what you ultimately decide on. But I'll just show you the way I do it. We're looking for this 127 extension, which in this case happens to occur right at the 886 as well. So if we come to this 127/886 level, that is going to give us a potential bearish Gartley pattern. Now, why is that important? Well, that's important for the trade that comes before this, and I'll kind of measure out this completion zone. What I'm also looking here for is whichever way you want to put it, is a potential breakout, a potential bullish breakout. You can see price action has tested these highs for the third time. On the flip side, right, our lows are getting higher as well, right? We're coming off a bullish move too. What I would expect here is a breakout to the upside. So why is that helpful? Well, one, you're a breakout trader. Obviously, you're looking to get involved in here. We spoke about different ways you can get involved before, during, or after. But now this potential advanced pattern formation zone gives us a nice area we can shoot for targets, right? If you're asking the question, well, where do I shoot for targets at? We have a nice level right here, right? We have our zone where we know the advanced pattern formation completes. We know we have Fibonacci confluence. If you look left with structure, you can see a nice little structure shelf right here. Again, the move right before the high momentum move down, always a good place to look for. I would say that the same Gartley pattern completion is going to be a great place to look for targets for this potential breakout. So again, I always say that there's no trend continuation analysis, there's no counter trend trading analysis, there's no pattern analysis, there's no classical chartist analysis. There is just technical analysis, and if you understand how to read a price chart and perform technical analysis correctly, you could be dangerous in any market, and you could be dangerous with any type of trading style. Speaking of dangerous, we're dangerously close to being rated the #1 trading podcast out there, but I need your help to do it. So if you don't listen already, make sure you check out the Trading Coach Podcast. 3 new episodes available each and every week, covering all the topics you want to hear and need to hear about as a trader from a pretty cool perspective. But also, if you get a chance, leave me a rating and a review. That's the best way you can support the show. So check out the Trading Coach Podcast, available on your favorite podcasting app. I recommend using it like an encyclopedia. Enter Trading Coach Podcast, enter the topic that you want to hear about, and then see what comes up.